morning, everybody.
Good morning, Summer.
Just want to do a quick check just to make sure everybody can hear me okay. Most people have already found it, but in the chat on the right-hand side, if you want to just let me know that you can hear me. Perfect. Thank you. Awesome. Okay, we've got a lot of people coming into today's webinar. Obviously, it's a really important topic, so there's a lot of people registered. So we might just get started, and there should be some more people joining us over time. So yeah, good morning again. Thank you for joining us for today's webinar. We are recording the session, so if you do miss parts of it or anything like that, you will get sent a link afterwards. My name's Summer Adams. I'm one of the Member Services and Communications Coordinators for MPAQ, and today I will be moderating this session. So today we're joined by Penny from MPAQ, and we've got Mick from Xact Accounting. We do also have Amanda and Josh joining us as well. I just don't have their photos, unfortunately, but that's fine. So Penny will just give us a quick update about the work that MPAQ are doing with the government around COVID-19. And then Mick, Amanda and Josh will be having a discussion about their tips to help your business survive and preserve your cash flow, as well as the government stimulus packages that are available. So yeah, before we get started, as I said, there is a chat function on the right-hand side. If you do have any questions throughout either of the presentations, feel free to pop those in the chat and we'll get to those at the end. So we'll do some questions after Penny's finished speaking and then some at the end of the session as well with everybody. But yeah, that's about it from me. So I'm going to hand over to Penny when you're ready.
Okay, great. Thank you, Summer. Welcome, everyone, and thank you for making time to join us on the webinar this morning. I'm just going to provide a brief update, as Summer mentioned, about the work that we've been doing with the government here. So firstly, I'd just like to give you a little bit of a rundown on the committees that we're involved in and the work we're doing with the government. So firstly, we're part of the Building Industry Recovery Group, and this group was originally set up to deal with the fires and the floods and the natural disasters that occur in Queensland. But obviously now this is expanded to also include COVID-19. And Ernie Kretschmer, our Technical Services Manager, is our representative on this committee. We're also part of the Ministerial Construction Council, which is a group of industry associations and unions that come together to deal with issues that are presented to us, and obviously COVID-19 is one of those. We have also been in contact with the QBCC, the Queensland Building and Construction Commission, obviously as our regulator, just in relation to minimum financial requirements. So obviously everyone was supposed to lodge their minimum financial requirements by 31 December last year. I understand from discussions with QBCC that not every licensee has been able to lodge at this stage. The message from QBCC is that they still want all licensees to lodge their MFR. So if you haven't done so, please do so. They've also sent out an email last week asking industry if they're having any difficulties lodging based on COVID-19. So if you've received that email and you are struggling to obviously or having difficulties, could you please let them know? We've also been working with the Department of Health. Obviously, plumbing is an essential service, and we've had some communication direct from the Department of Health notifying that plumbing is an essential service, because we want to make sure that you as plumbers can keep working during this period. The government has advised that they don't have any plans to shut down essential services such as plumbing, because obviously you guys are out there protecting the health and safety of our community. Yesterday, we circulated a press release, and it's basically calling on leaders to acknowledge plumbing is essential. And we also addressed or notified about the shortage of PPE. So we are requesting feedback from members if you are experiencing shortage of PPE equipment to let us know. So if you're having issues with gloves, masks, hand sanitizers, etc., we did send out an email yesterday. So I just wanted if people could fill that in and let us know, or even just put something on the chat. So we're wanting to know numbers of things that you're looking for, and also what items you're having shortages. And we're in direct contact with the Department of Housing and Public Works, and also the Department of Health, to let them know the issues around the PPE, but they're really looking for how many items are required during this time. We've been sending out a daily email to let members know what we've been doing and how we've been working with government, but also about the resources that we have available for you to access. So we have a number of items on our website. So we've got a fact sheet for members. We've got a fact sheet for consumers that you can use. We've got example leave policies. We've got flexible working arrangement policies. We've got a risk assessment policy, a workplace health and safety policy, and a safety policy as well. So they're all available to you to download. They are in a Word format, so you can access them and include your logo and your own company branding on that, so that you can brand them your own. So they are all available. We also ran a couple of webinars last week to help members based on the volumes of calls we were getting into the office in regards to potentially having to maybe stand down employees or what to pay people during these periods. So we ran 2 webinars last week. You can still access them online if you would like to, and we're planning to hold future webinars as well. We've also had a call out from members in regards to developing a course around putting on PPE equipment correctly, and in terms of what order you should be doing it in, and also in regards to when you're going to a consumer's house, what processes you should be following. So we're working on developing a training course at the moment, and we'll let members know as soon as it's available. That's probably the main items I just wanted to touch on. Probably just one other thing that we've mentioned that we haven't mentioned was just in relation to scammers. So we understand that there's obviously people out there that are already scamming consumers. So that is our next focus for press releases and getting it out into consumers' hands and to the media's hands about making sure that they're using a licensed plumber during this time of need. So I'm going to hand over to Mick from Xact Accounting. Mick and the team at Xact have been a long supporter of the Master Plumbers Association, and we're extremely grateful for the work and the support that they provide to us. We worked with them last year around a number of different workshops, and also specifically around your charge out rates and your markups and your margins. We covered some workshops and also developed a charge out rate calculator and guide for that as well. So thank you, Mick, and your team for all the work that you're doing. And we really appreciate the support that you're providing to us and to the membership. I'll hand over to Mick. Thank you.
Sorry, I'm just going to jump in. Sorry, Penny, just before we hand over to Mick. We've just got a few questions coming through that I just thought we might answer now. And then, we'll get started on with Mick and the guys from Xact. So it's just a couple of questions about what's being classified as essential services. So one of them, they're civil construction in the water industry. So wondering if they're classified as an essential service.
Civil construction, that's the work that they're performing on a commercial or a domestic?
Doesn't say that, just says in the water industry. And then Chantel's just followed that up with the same question, saying that she believes construction's been listed as an essential service in New South Wales, but wanted to check if there is talk about this being the same in Queensland yet.
Yeah, so we've been, as I mentioned before, we have been working with the state government on this issue, and also at a federal level as well. I would say yes. I know they've been pushing for building and construction to be as an essential service, not just plumbing, from other industry association and other industry bodies. Obviously, we want to keep the construction sites open at this stage and ensure people are still able to work. So I would say yes at this stage.
And yeah, sorry, they just clarified as well. Yes, it's commercial work, so subdivisions, etc. Hannah's just asked that she's had reports that there's a possibility that if they want to continue operating as an essential service, they'll be required to have certain PPE and to a certain standard. Do we know anything about this?
Not that I haven't heard of anything specifically in regards to the reports. Is that perhaps I can talk offline with Hannah on that and get some more detail so we can follow that up.
Yeah. And just another question about what's considered essential service. They do mainly plumbing and drainage in new dwellings. So probably same answer.
Yeah, we'll get some clarity around that.
Yeah.
But great questions. Thank you.
Yeah, there are a few other questions about PPE. So just, and I think we might have answered this in the previous webinar as well, with regards to entering homes with confirmed cases of COVID-19 to complete emergency repairs. So do they have the authority under the workplace health and safety legislation to send guys into a home with a confirmed or even suspected case? And then what kind of PPE is required in those circumstances?
So yeah, that will be covered in the training course that we will be rolling out. So we'll be able to have more information available on that shortly.
Cool. All right. And then we've got some good feedback from people about what PPE they're after. So we'll compile all of those.
Okay, great. Thank you.
Yeah, I think that's good. That's all right for now. So we'll come back to more questions with Penny later as well. So if you think of anything else, we'll come back to it. But yeah, so for now, we're going to move on to the main portion of today's webinar. So we are going to hear from Xact Accounting. So Mick, he is the owner of Xact Accounting. They're located in Indooroopilly. They've been a corporate supporter with MPAQ for a few years now, as Penny was saying. We're also going to be speaking with Josh and Amanda from Xact as well. So thank you, all of you, for taking the time to speak with us today. After we've spoken with these guys, we'll take the time to answer any other questions that anybody has. So just keep putting those in the chat and I'll keep an eye out on those. But for now, I'll hand over to Mick when you're ready.
Oh, thanks, Summer. And thanks, everyone, for joining us in what is quite a difficult time. I've got Amanda, who's also a chartered accountant, with us here at Xact Accounting. She's going to give you a little wave right now. She's going to chime in as and when needed. I've also got Josh, who'll come in a bit later on after this. He's our client director, and he's our most technical tax person here, and is well over on top of the detail of all of these legislative changes that are coming through as part of stimulus and keeping the economy growing. So he'll come in later on and help out with that as well. So I think just to sort of get going, I think the first thing that everyone really needs to consider is that they cut costs aggressively. So it's time to now take massive action, but planned action, and certainly not in a panic. So now's the time to start thinking about all these things and start to take massive action. I think also now's the time to don't go it alone. It's not the time to go it alone. If you're a small business and it's just you and your spouse, then I think now's the time to find somebody else as well that you can talk to about this and help you with it and help you through it. And particularly if you've got a mentor or somebody that you've relied on in the past, your accountant, somebody that may have gone through something like this. So the GFC, I've been through the GFC, and I was the CFO of a large recruitment company back in 2008, and because it was recruitment and contractors and staffing, it feels quite similar in many respects in the first few weeks, because that type of industry just hit the wall and fell off a cliff, and a lot of industries are doing that. That's not my feedback on the plumbing industry at the moment, but certainly I think there's a lot to be learnt from the GFC. And so if you know somebody, if you've got a mentor, or you know somebody that's been through this, it's time to give them a call and get some help, or give your accountant a call and get some help. So in terms of decisions, because there's a lot of decisions to be made, I think it's also time to think about making some tough decisions and putting the business first over anything else. You've got to make sure that you look after the business and get through this. Given that plumbing is essential service, classified as essential service at the moment, and there's no reason to think that it will be declassified, particularly because of health and safety reasons alone. It will keep going, but I think we all need to plan for it definitely coming off. Prices are going to come down, revenue is going to come down, demand is going to come down. It has to. And I think everyone needs to be realistic about that and plan for it. At the moment, anecdotally, speaking with a lot of our clients, plumbing clients, domestic plumbing is going gangbusters, is in the word of a few of them. I haven't heard anything particularly negative at this point about domestic maintenance, and for the time being, that will be the case. But I don't think anyone is bold enough to make predictions about anything right now, given what we've seen over the last few weeks. So domestic maintenance looks okay for the moment, but I think you have to assume that it's not going to be okay, that you're going to see revenue drops, you're going to see price drops. And it's time now to put together a, B and C plan for what may happen. So whilst we don't know for sure what's going to happen, you can certainly plan for a B scenario, an A scenario, then a B scenario, and then plan for a C scenario. And a C scenario might be that you will have a revenue drop of my plan, ABC plan as an accounting firm. I've got a 60% drop in revenue planned. We've already experienced 20-25%, but that's because we did have some hospitality clients that our main focus here is building construction, thankfully, but we did have about 20% of our client base in hospitality, and that's pretty much all of those clients have pretty much fallen over straight away. So we're already into plan B for us, but we've started to move quickly towards what plan C might look like. And like I said, I'm planning for a 60% drop, and I think it would be wise for everyone to plan for that level of drop. If it doesn't happen, then great. If it does happen, you pre-plan and you're ready for it and ready to go. So
I think, can I just jump in there? I think the point that we're trying to also make is that we're not being overly negative, but I guess we're planning for the worst and to be able to expect the best as this COVID-19 crisis continues on for a time that we don't know. So if we're taking sort of pretty strong action from a business perspective in the short term, we're trying to shore up our position for the longer term. So as things pick up again, we're in a really strong business position to be able to do that.
Yeah, good comments, Amanda. So just in terms of the sort of actions that I think everyone should be taking at the moment, at least, is, and you can see by the slide there, is everyone needs to get their P&L out. And if you haven't done this in the past, it's now time, is print your profit and loss. If you're in zero, it's quite easy to do. It's just reports and profit and loss. Print it, have a look at every single line item on that profit and loss, and consider what's non-essential. So any non-essential spend you should consider stopping now. I think from a plumbing point of view, or the plumbing industry point of view, I mean, obviously your biggest cost is wages and salaries, and then subcontractors. Then it's materials, and then after that it's vehicles, and the rest typically is rats and mice, unless you've got leased premises. But typically overhead in plumbing business isn't normally that big unless you've got leased premises. So you start with your wages and salaries and consider what you're going to do there in terms of if obviously if you've got demand and plenty of demand. I spoke to one domestic plumber yesterday, and he said he can't keep up. He can't even answer the phone. Now that's obviously as a result of a lot of people now working from home and probably sitting around thinking, well, I might just get that fixed or this fixed. I mean, I don't have to, I'm normally, there's nobody at home during the week, and I've wanted to get that done for ages. I'm at home now, I'll get it done. That may change, and certainly his comments to me were in relation to bathrooms and toilets and whether or not they wanted to stop doing that sort of work. And so everyone's got to make their own choices when it comes to that. So I think you've got to look at whether or not if you've got obviously full demand and everyone's gainfully employed and you're happy to do whatever work comes your way, then you don't need to really do much other than the normal stuff, making sure everyone's working efficiently and so on. But if demand starts to drop, then obviously you need to consider what you should do. If you're an owner and you haven't been on the tools, or you're only off on the tools for 50-60% of your time, you might want to consider upping that. And obviously as well, you need to look at what wage and subcontract costs you could reduce. Typically, people would obviously start with their subcontractors, whether or not they could reduce their hours, and whether or not the subcontractors will reduce their rates. There's probably no doubt, I think, that prices are going to come down. So forget about demand. Prices are likely to come down anyway, as we, depending on how long this thing goes for. So owners back on the tools is one thing that you should consider. Wages, you need to consider. I mean, you take advice from master plumbers. Obviously, they're there for a good reason with this sort of, and they've already had a webinar last week. So take some industrial relations advice about potentially reducing hours, potentially reducing people's salaries. And that's another option. It's not something you want to do lightly, and it's not something you want to probably be the first at doing. But at some point, that may become a real consideration where you reduce people's salaries by 10% or 20%. But again, you need to take industrial relations advice in respect to whether or not you can do that and how you can do that. And it may well be that you can stand people, you reduce people's working hours as well. So there's one option is to reduce people's salaries by X%, but they're still full time. The other option is to reduce people's work days or work hours per week. But again, I want to put a caveat on that you need to take industrial relations advice from master plumbers before you do any of that. But certainly in our business, we've already reduced. So we've reduced salaries by 20% immediately. And everyone's agreed that that's the right course of action considering the circumstances. Because at the end of the day, you need to protect the business, and typically one of the biggest assets of these businesses is your staff, so you need to protect your staff. The other sorts of things that you could do is I would be looking at outsourcing. I mean, some people have back office administration, logistics and so on, bookkeeping in-house. I think you need to consider whether or not you could outsource that potentially and reduce costs. There's people like Tiffany English of Modus Operandi. She offers an outsourced service to this industry. And so you want to consider people like that, outsourced bookkeepers, etc. Otherwise, as I said before, non-essentials you should consider, and I think another one, and obviously if it gets to the point where you need to look at bank debt and vehicle debt and whether or not you can take a breather on that, if anyone needs information in relation to what their banks are going to do, my broker's sending a list of link outs to all of the banks today, so I can flick that on to you, and that'll have all the information in respect to the banks and what you need to do if you want to take a breather from bank repayments. I guess the other thing is materials as well. I mean, now's the time to shop around, to put pressure on the suppliers, depending on Whether or not it's come off for them or not, I don't know, but it will. And so their margins are likely to get squeezed. And like I said, cash is king. Cash is king. So right now you need to hoard cash. If you've got access to, and that includes to delaying payments, whether that be the ATO or other suppliers or other non-essentials, now's the time to hoard cash. And if you've been slow to adopt the on-the-spot payment system for domestics, unfortunately, you're going to have to change your business model quickly, in my view at least, and start taking credit cards on the spot and taking people's money on the spot. I think the days of sending invoices to domestic customers after you've done the work on the basis that everyone's going to pay are probably gone. And so we just don't know who's going to be without a job tomorrow. And so you really need to get that money on the spot.
Can I just jump in there, Mick? In addition to the the pay on the spot technology, a lot of the banking apps, for example, the Commonwealth Bank app, it enables you to pay somebody immediately, whether it's linking to a mobile number or a bank account. So most people do have the capacity to pay for services whilst you're there, using their online banking app on their phones.
Okay. Yeah. Yep. That's yeah, indeed. And there's always those little tiles too you can get. Now there's lots of the options that you can get put in place pretty quickly, as Amanda's just said. Look, and I think just be open and honest with your staff and let them know the position as you go. I think that's really important. That you just let staff know what's happening. They're your asset. So. And I think offering early payment discounts to debtors as well is important. The other two that I haven't touched on that I'll touch on very quickly and then hand back to Summer is lines of credit. People that have got lines of credit might draw down on them or consider drawing down on them at least, because we just don't know what the banks are going to do in relation to some of these lines of credit. So if you've got, ODs that aren't being used, you might consider drawing down on it. So the bank may shut these, or reduce your overdraft. We don't know what they will do, but certainly in the GFC they did things like that. They did all sorts of crazy things in the GFC, and I won't bore everyone with that. But I think the message is, if you've got a line of credit, draw down, put the money somewhere else in another bank, and just in case you need it. If you don't need it, you can always give it back. It's easy. But if you don't do anything and you get yourself in a position where you run out of cash, then obviously that's a very, very difficult situation. Also, if you need to apply for credit, do it now. The banks are going to be absolutely inundated with people applying for credit. So start the process now. Don't wait 2 weeks, 4 weeks, 6 weeks, because it'll be a very difficult and time-consuming process. Also, the banks are going to be changing almost daily their criteria. So they have a set of criteria in order for you to be worthy of credit, and almost a computer can tell you whether or not the answer is yes or no. And so as the banks update that, then obviously you can be shut out of the credit market. So if you think you need credit, do it now. Would be the other one. And I think that's about it. Is there any questions? Do we take questions now, Summer, and then move on to the more technical stuff, or what would you like to do?
Yeah, I've got a couple, just because we've got a lot of questions coming in, so we might just do a couple now. So one of the biggest things people are asking is, when you say cash, you don't actually mean like bits of money.
No, well, okay. No, I don't. No. Look, I think I've heard stories of people splitting money between the big banks. I mean, as some of you may know, in the GFC, the government there's an attempt to be a run on the banks. So the government stepped in and said, "We'll guarantee the banks. We'll prop up the banks." Our big four banks are solid as a rock, and I can't imagine what that would look like if there was some sort of issue with those banks. It would be a very, very bad situation if we got to that point. Having said that, I've always said, since the GFC though, only since the GFC, to anyone that wants to listen to me, stick with the big four. And the reason I've said that is because I saw the second tier banks do some crazy stuff in the GFC, sell their loan books to, other banks, and then those banks wound up interest rates and called in loans, and they put people in very, very difficult situations. So since the GFC, I've always said stick with the Big Four. Just for those reasons, is that they're bigger and they seem to be able to handle these shocks much, much better. And they've got massive balance sheets, these banks, and they're all, the best rated, credit rated banks in the world as well. So no, I'm not suggesting for a minute that you go and stick a whole bunch of cash under your mattress.
Yeah, cool. I think that confused some people there. And another question that's coming up a lot is just around what you said with materials. Did you say that you think that the prices will start dropping with materials?
Look, yeah, I'd say so. Look, I don't know at this stage. It's a bit early yet, but at some point, if demand comes off, obviously, then the demand for plumbing services is going to have a knock-on effect for demand for materials, and in which case, Reece and so on will be looking at their business and what they can do, and they might need to squeeze margins. Well, supply and demand, you always need to squeeze margins when demand drops. So they will be looking at what they can do, and so all plumbing businesses should be looking at what they need to do, and in which case they need to go and look at material costs and whether or not they can save money.
We had quite a lot of comments come in about, I think I might have missed it though. So did you say that people should be lowering their charge out rates?
No, absolutely not. So for the moment, let's just get this clear. For the moment, yeah. I think there's possibly demand for materials is going up.
Yeah.
As particularly, as I know, domestic maintenance from everyone I've spoken to, demand's gone up. As a result, there may well even be material shortages going on. Who knows? And at this stage, absolutely not. Absolutely not. There's no need to discount. If anything, if you're in domestic maintenance and you run off your feet and you're picking jobs, you might even put your prices up. Yeah. But what I'm suggesting is that you need to plan for that to change, because as we've seen, this has been changing very, very quickly. And so I don't know what next week looks like. And I don't know if there's many people that know what next week looks like. So let's just assume the worst and hope for the best for the industry. I'm quietly confident, but my God, I don't have a crystal ball.
And I think too, Mick, I mean, we were speaking before the webinar and we both said every business should be controlling their controllables. So you don't know where the market's going to head and you don't know where demand is, but you can certainly control your business costs and manage your relationships. So every plumbing job is a relationship between your customer and your supplier of materials and your employees, etc. So it's about really making sure that you're in a strong business position, control your controllables and work on those relationships. That's probably the best thing that you can do at the moment.
Yeah. No, agreed. So, yeah, I think, look, for the moment, no, prices might be going up and price of materials might be going up, but I'm probably just trying to plan this thing out a bit and say, well, what might happen? If for whatever reason prices stayed higher and material costs stayed a little bit, well, great, that's a fantastic outcome for everyone, but let's just assume that that's not going to be the case. And what's your ABC? Don't try and make your ABC up on the fly, because we've all learned how difficult that is to do in the last week or two. Try and plan it out now. And hope that it doesn't happen. What do you think, Amanda?
I agree. I think as a business, we've taken the view that we've gone hard early to future-proof our business and jobs. And I just think that that's what you should do. I think that you need to really be honest, take a good stock of what you've got in your P&L as a business and also at home, and make sure that you've limited your exposure to the maximum that you can. Yep. This particular point in time, and then if you do that when things pick up, you'll be, it'll go straight to the bottom line.
Yeah, look, I think the interesting thing about this is I think it's a good opportunity to review your business practices and how you work and your cost structure and so on. If anything that'll be good to come out of this, it could be that. So now's the time to do all that. So yeah, look. Like I say, this industry for the moment is looking pretty good, but things could change. So let's hope they don't, but things could easily change.
Cool. And yeah, we'll get to some of the other questions towards the end, just because they're about stimulus packages and stuff, and I know we're going to address that shortly. I suppose so. One of the major costs for a business is staffing costs. Do you have any recommendations on how business owners could look at retaining those key staff while stemming the cash flow?
Yeah, and again, just, you need to take your own IR advice, and master plumbers can provide that advice, but certainly, subcontractors, and again, at the moment, I don't think, this is not really an issue, but down the track it may well be, where you might look at reducing salary costs by 10 or 20%, and certainly a lot of industries will be doing that, if you can. And then you may look at reducing people's hours rather than laying them off, so that at least they've got some income, and at least they can keep working. And when this thing passes, which it will, you can ramp them back up again, and you've still got your workforce. Coming up in a minute on that, there is ability to people to access the copped a 20% hit on their hours. There's an ability for them to access $20,000 in superannuation, 10 this side of 30 June and 10 the other. So the government is anticipating this already, and has put in a mechanism for people that find themselves in that position to be able to access their superannuation early.
Cool. So we might move on to the government stimulus packages, and we've got Josh joining us now.
Hi. Good morning.
So I might just let you guys take it back over, and we've got a lot of other questions, but we'll get to those at the end. I promise I'm seeing them all, and we'll get to them all.
Yeah. Okay. I might just introduce Josh. Josh is a chartered accountant, a tax technical guy. I'll just briefly go over the first stimulus, because this is an excellent one, and then I'll let Josh fill in the detail on it. But he's the guy that waits for the legislation to be passed in Parliament, and then he's up early reading the explanatory memorandum around it and so on. So he's well over the technical side of it. But I think the big one for everyone, and particularly those that are already on top of their ATO bill, is that the government are going to give everyone up to $100,000 tax-free income, non-assessable income, in their first BAS. So it's in relation to PAYG withholding. So those businesses that are withholding taxes from staff will get up to a maximum of 100,000, split 50 this side of 30 June and 50 the other side of 30 June. And how they're going to do it is, if you are a monthly payer of PAYGW, so you lodge an IAS every month, and then in the BAS quarter, you lodge the PAYGW inside of your BAS, so you're a monthly payer, the government will look at the amount of PAYGW you paid in the March BAS. If you're a monthly payer, they'll multiply that by 3. So let's say, for example, you've got a couple of staff, 3 or 4 staff, and you withhold $10,000 in the March BAS, then the government will multiply that by 3 and put that as a credit on your account. Now, if that results in you getting a refund, they will send you the cash. And that'll go to a maximum of 50,000, a minimum of 10,000. So if you only employed one person, it's yourself, and you only take $2,000 in withholding taxes, for example, in the March, then and you're monthly, then they'll times that by 3. Times it by 3, and it'll come to 6, and they'll give you 10 as a minimum. And you'll get that again in the July, August, September, October period. So I'll let Josh take over from there. And Josh, maybe you can add a little bit more detail.
Yeah, you've got a good summary of the withholding. And to sort of follow on from your example as well. So in March, you've times by 3, you've got 30. When you come to do April, you've still got a little bit of an amount left before you hit the maximum of 50. So when you get to April, say your withholding is 10 again, you'll get another 10 in that month. And then, because in the second month, April, there's not a multiple applied. The multiple of 3 only applies in March. So it's basically over the next few months until you get up to the maximum of 50. that's what's available. Whatever you get in this period, you essentially get the same again in the next period, but it's essentially spread over the 4 months for June, July, August, September. So if you happen to maximise to 50, so in this side of June, on the second half, you'll essentially get 12,500 each month as a credit, if that makes sense. So that's the big ticket item with the stimulus package, is the withholding credit. Now, be very clear that if there are actually existing debt on the activity statement account, and the credit will apply to any outstanding debt first before you get any cash refunds. So don't sort of think that this part of the stimulus package is a cash in hand scenario, but it is a true credit. So it's not cash in hand, but you don't have to part with the cash either. So it's
but if you lodge the BAS and it is in a credit, they will send you that cash, right, Josh?
If you didn't have any existing debt on the activity statement. If you're carrying existing debt on the activity statement, we'll get to that shortly. The ATO will offset existing debt with credits.
Yeah. And Josh, will this ever need to be paid back?
No. It's as Mick said, it's a tax-free. It's a pure stimulus. The government is spending 180 billion, and they're committed to spend the money, and that's what they're spending to get the economy going. So they're not expecting that back. Yeah. Yeah.
Well, that's excellent. So, I mean, just as an example, I've got one larger client this morning that I spoke to that will get the full 50,000 in the March BAS actually, and he's got two businesses, and so he'll get it on both. So he'll get 100 in that March BAS, and then, or the two BASs, and then in July, August, September, October, he'll get 25k each month. All right.
That's the big ticket item. The next one is which is quite important for your industry is what's the government doing in terms of apprentices and trainees, and what's the support there? So as you can see, for a period January this year to 30 September, 9 months, they are offering it's a 50% subsidy of apprentices or trainees' wages during that period to a maximum of 21,000. So what that means is maximum of 7,000 over the next few quarters, 3 quarters. The key is that the trainee or apprentice had to be in training already at 1 March. So be careful of that you don't go and put on a whole bunch of trainees, apprentices now and expect that stimulus, part of the stimulus package will apply. They had to have already been in training. So that one's not particularly convoluted. That's quite an obvious part of the stimulus package. The key thing is it is all administered through the apprenticeship and training organisation network. So you get in touch with your training organisation to facilitate that subsidy, but that is sort of working in conjunction with the PAYG withholding part of the stimulus package as well. So it's sort of get a double benefit for apprentices and trainees through the stimulus. Now, in terms of those operating as sole trader, we've only got a small bit in our slides on this, but for those operating as sole traders, I think it's and that's individually. So sole trader, ABN, yourself, you're operating the business, no company, no trust. If you're in that scenario and you are facing, albeit we've had a lot of discussion about possibly we're not seeing a big downturn in plumbing, but look, that's planned for the worst at this stage. If the sole trader is seeing that your business is suspended or your revenue drops by 20, the government have relaxed your ability to access your super. Now there's a maximum of 20 that's available, and be very clear, this is actually tax-free as well. No tax is being paid on these lump sums coming out of super. And so this side of June, it's a 10,000 that that's eligible to be released when you meet that eligibility criteria, and another 10 in the next year. So that's quite valuable, and there's a bit of a contention around whether super should be accessed, but look, it's in this sort of environment, it's a necessary sort of consideration, given, look, a lot of people have been parking a lot of their savings in there, so when you need it most, they've opened up the door on that. And that application is directly through your MyGov account straight to the ATO. So you do not need to contact your super fund directly. The ATO, you go up there onto MyGov, you apply through there, they facilitate with your super fund. Okay. You have any input on that, Mick?
Sorry, Mick, I think
Sorry,
your
Mick, your mic's
microphone
not
might be
working.
off. Yeah.
No, I think this is the one that's this was the one that's also available for employees that might be laid off as well. The 10K. So yeah, no, that's one that many people are going to have to access during this period. Now,
they're the three big ticket items that, in our view, focused on for the webinar today. There are an array of measures coming out of the stimulus, but I think we wanted to sort of keep the content very relevant for you today and target those big three ticket items. Now, the next, not necessarily stimulus, but practical measures we can be taking now, and it's all around managing the ATO and your debt. So, and look, I encourage you now, if you haven't already, talk to your tax accountant, because they need to be working on side with you to be facilitating these other measures. So for those out there who are in the pay-as-you-go income tax instalment system, so you're paying your income tax each quarter, the ATO are relaxing the need to pay that this year, understanding that we're in a very uncertain environment and there's been some very negative impacts. So for the March instalment, the ATO are allowing you to vary that to nil now, but not just vary March to nil, also claw back what you've paid in tax instalments for September and December as well. And that can all be done on the March BAS and can be facilitated very easily by your accountant, tax accountant. That can be lodged, and that'll sort of give an immediate injection of cash as well into the business, and that's very practical and a very easy step that you can take now, recognising that really the real terms tax bills for a lot of people are probably going to be a fraction of what they historically were, but it's a flexible measure at this point, and that leads on to the next big thing in terms of trying to manage debt that you've got now or upcoming debt. So the ATO quite clearly have come out and said, look, for up to 4 months, we're going to allow you to kick your debt down the road with not having to pay, recognising that, look, you're trying to hold as much cash as you can in your business right now. And so don't worry about trying to manage your tax debt as well. We'll park that and we'll defer it. So again, get your tax accountant. I know us here, we're automatically applying this deferral for our clients because it's available. They had to come out quite clear and said, yes, you can do this. So get onto that right now. If you're currently in a debt position, and this also includes debts that you may already have under an ATO payment plan. Don't just assume that, oh, it's in a payment plan, I'll just keep paying it. No, that's not the case. The case right now, given the uncertainty, you can cancel that payment plan and kick that debt down the road. It's just a necessary step, and the ATO is supporting business on that. So,
yeah. And if I could just chime in then, I mean,
go, Mick. Yeah.
My view is probably that you would do that regardless, because there's no interest, there's no penalty, and you can park it in another account and know it's there, even if it just makes you sleep better at night. And then when this passes, then you just flick it back to the ATO. So my view is you'd probably do it. I mean, obviously your circumstances are all different, but my view is you'd probably do that. And just to answer a couple of quick questions that have been raised, and I know we're going back here a little bit, is Anna Murphy Can we claim it before April 2nd? No, it's mid-April. The application comes.
Super.
Yeah, that's in relation to the apprentices. Deborah Love, is it less than 20 employees? Correct.
Yep.
Can workers also access their super from Deirdre? Correct. You can, Deirdre, as long as they've taken a 20% reduction in their hours. In respect to sole traders, they have to take a 20% reduction in revenue in order to be able to access their super. If we claim refunds for September, December, will we ever have to pay that back in the future? From Helene, yes, if you were tax payable by 30 June. So, I mean, those instalment taxes that Josh was referring to are PAYG instalments, pay-as-you-go instalments, income tax.
Income tax,
tax. So that might be the income tax for if you're operating under a company structure. It might be the income tax for that. So your September, December, March. So you could defer March and go back and say, hey, listen, I'm not going to make the money I thought I was going to make. I want my September, December back now. And so, yes, that just, Helene, that just depends on whether or not you made money or you didn't make money come 30 June. And Advisory Credit, we received them. Yeah, and I think, Cheryl, you were saying we can defer the ATO debt, but you advise that the credit will receive from the PAYG we're holding to go the debt first, correct? So this stimulus, if, for example, you are trading well, which at this stage most businesses, certainly the non-project based plumbing businesses, should be doing fine, and you are given the stimulus, but you've already got a debt with the tax office, they're just going to set that off against that debt, which is still a good outcome. But you're not going to get that as cash in hand. Now, a lot of businesses won't get it as cash in hand because their GST payable will be greater than the stimulus amount, potentially. But there will be businesses, and I don't know what percentage of businesses will actually get cash in hand. So yeah, there's just a couple of quick ones that quick answers there. If anyone else has got any more questions that they want to answer, just flick them through.
Look, if you max out your PAYG credit in the first few months because you're a relatively large withholder, so that means then the potentially April, maybe May, June months, if you no longer got a credit there and you're incurring a debt, it's that debt that you would be looking at to defer. So you do get a benefit either way. Yes, the credit will go against existing debt, but any future debt that comes up, the ATO have quite clearly come out and said defer for 4 months. We're allowing that.
Absolutely. And if you went into this thing in the pain locker already, then you would absolutely defer that debt while you get through this thing. I think one of the things that I didn't talk about before, which is, I might just, because we're getting close to the end here, I think also everyone needs to start looking at their own home profit and loss statement and what they can do there as well. This is the time to do it, not later. All right, well, I think we're getting close to the end here. Summer, is Summer still there?
Yep, I'm here. So we might run through some of the questions. Because, I know you just ran through some of them, but we'll just close this for now, just so we can get rid of that.
Okay.
All right, so we might just go back a little bit, just back to the PAYG withholding. There was a couple of questions around this. So Donna asked, do you know if with the stimulus that's available, does that include partners who lodge a PAYG external to staff?
So just to ask that question again, sorry, Summer. So it relates to a partner that, say it again, please, Summer.
Who lodges a PAYG external to staff. I think they're a partnership structure. Do
you understand the question, Josh?
No, I'm trying to work out how that would be structured in the partnership.
It might be a PAYGI that they're referring to.
Yeah.
So that's pay-as-you-go income tax instalment.
Quite different to withholding. Yes.
Yeah, withholding on employees' wages versus PAYGI, which is payments for income tax as you go quarterly. Yeah, so quite different.
Yeah.
Okay. We might follow up with Donna afterwards. So another question from Donna, actually. Sorry. So the ATO sends us a, I can't say this word, fugue, F-U-G-U-E, to pay as we are a partnership. How does this work, as it does not show on the BAS?
Yeah, I think that I did see that question come through. I think it's just it's been misspelt or fat fingered. I think it's actually again PAYGI, so it's instalment tax. So it's quarterly instalment tax that's payable. And if you think that you're not going to make as much money as you did in 2019, then you could vary that to nil. And you could go back and say, hey, listen, that money I gave you in December quarter and September quarter, can I get that back off you now as well? Yeah. So some people will be doing that just as a bit of a safety mechanism, because again, you can always put that in a bank account off to the side and just pay it when you need it. If this passes next week and it was all turned into just a bad dream, then that money's sitting there. You haven't used it. You just give it back to them.
So continuing with these questions about PAYG, Donna gave us a thumbs up too.
Nice one.
Just a couple of questions around from Kathy and Lucia. Will this happen automatically with the lodgement of activity statements, or do they need to apply for this?
No, automatic. It's applying very much automatically. So as soon as the key thing is, and that's probably a message we should have pushed, is that for all of this to work, you have to keep up with your lodgements. So don't let lodgements fall behind. So lodgements have to be continue. As long as they're continuing, the ATO look at the wage disclosure items on the BAS and immediately apply the credit. It's going to wash through the activity statement system automatically.
Yeah, I mean, and that's a good point. I mean, don't stop reporting. And before this crisis, non-reporting was almost a bigger crime than not paying them. In fact, that if you didn't report for a few months and then reported, or a few quarters or whatever, the tax office take a very, very dim view to that versus not paying them, where they seem to be quite amenable most of the time. So I think it's a good point. You must keep up your reporting to both QBCC and the ATO even during this period.
It's much easier to work with the ATO right now if you've lodged all your forms. They're much more willing to work with you on debt versus not lodging. Very much.
In fact, they won't even talk to you about debt if you haven't lodged. They'll just say, get your lodgements up to date, get yourself sorted first, and then we'll talk to you. But like I say, in this time, I think the tax office have stopped all firmer action, which include garnishes and all sorts of statutory demands, et cetera, have all been stopped. And in fact, legislation's come out to say already that everyone can trade whilst insolvent for the next 6 months if necessary. So if you're insolvent and you are concerned about trading whilst insolvent, you no longer need to be concerned about that, because that's been legislated. And in addition to that, just as another point, if the statutory demand mechanism, which was, if you owe me money as a company, I send you a statutory demand, so you got 21 days to sort this out, or I'm going to apply to the federal court and have you put into liquidation. Well, that 21 days has now been extended for both bankruptcy and liquidation to 6 months. So you cannot put a company into liquidation at the moment. It's not possible.
And just Kathy just had a follow-up to that question as well. So do you know what the cutoff date is to get money back for previous lodgements? So the cutoff date to apply for a refund, she means?
It falls in the same period as your March activity statement. So when 28th of April is essentially your cutoff point to lodge that, deal with your variations, and also claw back. It's all done on the same form, to claw back to prior periods. So 28 April is the message I'll give you, 28 April.
Okay, cool. I think we covered all those questions. So now we might move on to the apprentice subsidies, or the stimulus package for apprentices.
Yes.
Quite a few questions here. So first one's from Emma. So with apprentices, what happens if the apprentice was registered prior to 1 March and then moved to a new employer? Would the new employer still be able to access 50% of the benefit?
Yes, that is a very, very clear message in the legislation. It is legislated. Yes, where a business is not able to retain an employee, the new business is eligible for the subsidy. Absolutely.
Yeah.
Cool. Chantel said we have a qualified drainer who is starting his plumbing apprenticeship. So I'm assuming if he hasn't started just yet, then he wouldn't be eligible.
That's right.
No, because it says they must be employed since the 1st of March this year.
Correct. They had to be in training from the 1st of March. If they weren't, look, the government has just basically drawn a line in the sand and gone 1 March. You have to be in training by then.
Yeah. There is another question around that whole 1 March thing. So Renee just mentioned, so 1 March was a Sunday, so they had an apprentice start on the 2nd of March because it was a Monday. Do we know if in that instance common sense is going to let them apply for it?
Oh, look, I've got to hope common sense prevails and it's the next business day. Look, you'd have to, that might be the touchy point in a grey area that probably hasn't been addressed.
I think if we talk to the Australian Apprenticeship Centre, which obviously with Busy at Work or MEGT, one of them, to just be able to maybe get some clarification on that, I think that's good. I know also there was another question or maybe a couple of questions around people having more than 20 employees and were they going to be eligible. It does also say that it is only up to those businesses employing fewer than 20 employees who retain an apprentice or trainee. So in regards to those larger businesses, and I do understand that one of our members has more than 20 apprentices within the company, and also I think there was another one that said they had more than 24 staff. So we'll talk to the Queensland government because this one's specifically a federal funding. Yeah. We'll talk direct to the Queensland government and see if there's anything we can do there to support businesses that have more employees than 20.
Yeah, I think specifically Andrea raised that. So they have 19 full-time employees, 19 tradesmen, I suppose, 5 apprentices on top of that. So in total, 24 employees, which they're finding out now is going to disqualify them. But
correct.
Yeah.
Unfortunately.
So we'll take that back to the department. I spoke with the Department of Small Business just Monday, actually. So I'll go back to them because they were asking what other support members are looking for. So I'll go back to them and say, this is the feedback that we've received and this is what can you help in any way in this area? So we'll keep everybody in touch. Obviously, employers can register, as you mentioned, from the 2nd of April. So as soon as we've got that, we'll be able to send around the link so that members can access it.
Yeah.
Sorry, there's a lot more questions coming in now. So,
I think I've just seen a question from Cheryl, which I might just address quickly.
Yeah.
In relation to the subsidy for apprentices, it's not going to be automatic. You will need to go and contact your training provider, and they will facilitate. It's not going to be automatic, so you will need to sort of pull the trigger on that one and actually get it going.
Yeah, so we'll send out the link so everyone knows where to go closer to the 2nd of April, which is obviously next week.
Yeah.
Katrina just asked as well, for people that already have the apprentice wage subsidy in place, does anyone know whether that revokes their eligibility for this new stimulus package subsidy?
No, that specific case, no, I don't have the immediate answer on that, but I can take that question offline and come back with an answer.
Yeah.
On that one. Yeah.
And Ken asked, does anyone know whether the apprentice subsidy goes against any ATO debt, or can it go against any ATO debt?
Our understanding is it'll be separate from the ATO sort of withholding debt system. The subsidy will be provided irrespective of what's happening in that other system. Yeah. So no, it won't just go and start applying to other debt. It's a direct subsidy on it.
Okay, cool. We might move on to superannuation. So there's only a couple here, well, actually only one. Just asking whether their wife's super can be accessed. So there's not any context there, but I'm guessing maybe a sole trader. So asking whether the wife's super can be accessed as well.
Yeah, look, we need to be careful with how deep we get into talking about super in this environment. But at least what's the ATO have come out with, it's not a sort of cross-spouse arrangement. It's per individual. So I would need to check that one more carefully. But the message we have is that it's individual.
Nothing that we've seen so far.
No, that it's not sort of the spouse can share their super. It's just per individual. You're looking at it.
Cool. Penny, I'm not sure if there's a few questions about QBCC. So a lot of questions around Form 4. Obviously, we can't really answer those about whether the QBCC is going to be waiving those fees, or do you know anything?
There's been no discussion at this stage in regards to waiving a Form 4 fee. Definitely something that we can raise with the QBCC since the feedback that we've received from the webinar this morning. Also, in regards to licence fees, there's no conversation at this stage in regards to relaxing of licence fees either. QBCC is not, the government, I suppose, is more taking an active approach. QBCC is sitting and supporting behind in the background. They're not sort of taking the lead role in COVID-19 as such.
So probably same answer, but do you know whether QBCC is going ahead with auditing? So apparently Renee's just said that they're up and it's a headache they don't need at the moment.
Okay. Is
sorry.
that as in auditing Form 4s? Or is that auditing as in minimum financial requirements?
Renee, I'm not sure if you can provide some clarification. It just says, is QBCC going ahead with its audits?
If that's in relation to compliance audits with MFR, I got one probably 2 weeks ago, and I was a little bit surprised, to be honest, because they had said that before all this that they were people had till the 31st of December to comply with the MFR. Having said that, that particular issue was one that had blown over the top of their maximum allowable turnover, and it was prior to this all starting. So, but I've certainly got nothing formal to say whether or not what they're going to do next. Have you heard anything, Penny?
No, so my understanding is that they need to, if you haven't lodged from December last year, you need to lodge. Even Correct. If you don't meet, you need to lodge. And then they will be reviewing in terms of it, but like you said, it's still not till December this year.
Yeah. Although, like I said, they were still doing a couple of audits that I've got, but one would think that they potentially have to going to pivot like the rest of us.
So I think it depends on what category you are in Correct, as well. Yeah. They were very much focused on the categories 4 to 7. Yeah, but not the SC 1s and 2s in categories 1 to 3 as well.
Yeah.
So yeah, she just Renee just clarified she was talking about MFR. So yeah.
Okay, thank you.
There's a question from Lorraine. Do you know anything about the bail-in? Does this give the government the rights to take any savings from our bank account?
Look, I don't know about I did see that one. I'm not sure what that's referring to, the bail-in. I've never heard of this government. I just don't think that's even a consideration for the moment.
Okay. One other question, sorry, just going back to the apprentices. Somebody just asked whether we know the apprenticeship subsidy, is it based on the gross or the net pay?
Gross.
Gross, yeah.
Cool. And quite a few people have been asking about the $550 a month benefit. So people are like asking if their plumber can reduce their hours by 20%. They've been told they can apply for the $550 a month. Somebody else said that if I reduce my hours by 20%, can I apply for the $550? Does anyone know?
Yeah, look, on face value, if you take the measures on face value, that's the criteria. But I'm going to preface this very carefully with, look, the government are going to be looking at people who have decided to make a change. So the 20% reduction had to have been a proper commercial requirement. If you've just done it so that you can get some of the stimulus package, look, the government are going to be all over that, because they'll see that as, oh, you've sort of made a scenario to get a part of the stimulus package. So, look, I'm not ruling it off the table, but my careful advice would be to, if you genuinely are required to reduce the hours by 20%, then yes, that meets the eligibility criteria. But do be careful of just doing that just to get the stimulus package. The government will be seeking to look at those sort of arrangements where you've sort of put yourself in a position to get it where you didn't need to. If that makes sense.
Cool. And just going, I suppose, right back to the start, there was quite a lot of questions about debt collection. So Simon in particular said that he's got a lot of people owing him money. Do we have any tips on the best way to collect monies at the moment, monies owed?
Discount.
That's right.
I guess the best, it's a very difficult environment to force people to pay you, and that's why you've got to be very, very careful about credit going forward. Who's going to be able to pay you, and that's why with domestics, I'm suggesting you don't get yourself into a situation where they owe you money. With the commercial stuff that's already on the table, the only suggestion I've got for that is discounts. And you may consider going early to debt collection, pushing it off to debt collection straight away.
I think also in the QBCC, you've got the ability to do a monies owed complaint. So it is something that you can lodge direct through to the QBCC. You've got to lodge that through with obviously all of the paperwork, etc. If you are waiting on QBCC to come back to you, please let us know. We have been able to help members through this process as well, just in terms of asking QBCC if they can provide an update in regards to the status, obviously with your permission given to us to be able to do so.
Yeah.
Yeah, so I think the example specifically that Simon gave is that they've got I'm assuming it's a big builder who's withheld payments, and then now their office has turned off the phone.
So you'll need
QBCC.
you'll need to go direct to QBCC. Also, obviously we do have a debt collection service on our website, a debt recovery letter on our website through Cornwall Solicitors, so they do support members that way. So you can jump on in the members only section on the website and go on and fill that in, and then you will get a letter from a lawyer which will then be sent direct to the consumer.
Yeah.
Cool. Cool. Simon said thanks. Yeah, I feel like we've gotten through majority of the questions. Some of them were similar, so I just kind of tried to combine them. So sorry if I didn't read out your exact question, but hopefully we have answered as many as we can. After the webinar, we'll send out a thank you email, so anybody can still submit questions to that, and we might provide a feedback afterwards of any of the questions that are raised following the webinar.
And just the other thing, Summer, we're happy as long as we're happy to take a 20-minute call from anyone. If we miss the call, which is likely, we'll be ringing people back up until Saturday at 5 o'clock. So people are welcome to ring my mobile. Like I say, if I miss it, it's just because I'm attending to others. The only thing you need is just to state your member number when you call. And we're happy as a member of Master Plumbers to give you 20 minutes on the phone about some of these things that have been raised today.
Yeah, absolutely. So Mick's phone number's up on the screen now, but a few people did ask about the slides. So yes, everybody will get a copy of the slides afterwards. So if you don't take it down right now, then you will get sent out. I've already answered those. So I suppose just to wrap up, I just want to say thank you to Mick, Josh, Amanda, Penny, everybody for joining us today. Sorry, there's a lot of comments coming in.
Yeah, and thanks thanks for the feedback on the PPE as well. We'll collate those, as Summer mentioned.
Yeah.
And yeah, some really good points that really good questions and some really good comments as well that have come through. So thank you so much. This is the best time to be taking advantage of your membership with Master Plumbers. So thank you for getting involved and participating. And as I mentioned earlier, all of those resources are available on our website for you to access. Summer will send out a thank you email to everybody for participating in the webinar. So you will get a copy of these slides as well.
Yeah, and I just wanted to mention on the thank you email, we'll put a link to the form that we've created for PPE. So that's a specific feedback form where you can enter the amount of everything that you're looking for. Yeah, so that'll be on the thank you email. But yeah, that's about it from us. So thank you, everybody, and have a good day.
And if anyone has any other ideas for future webinars, we're currently looking at some, again, for next week as well, and working closely with Mates in Construction as well. So if anybody needs some support in that area, they're also available to help members.
Yeah, absolutely. Cool. Thanks, guys.
Thank you. Thank you.
Stay safe.
Cheers.
Thank you.